Hey everybody, Q here with the Charting Discovery Market Update for the week ending June 28th, 2013. We actually have a lot to cover today, so I'm going to jump right into it. And what we're looking at right here is LINE daily chart. And you'll recall on Wednesday, after the market closed on the 25th, I saw this price interaction and this doji interacting. It's actually a gravestone doji interacting with the 55-day moving average. So I saw that after the markets closed on Wednesday. I placed a limit order to buy a put option at the closing ask price of the day. So when the market opened, the trade was placed, and we played around a little bit with the 55-day moving average and then tanked down hard through the 34-day moving average, through the 21-day moving average, closed at the low without hesitation. So I saw that and I was pretty darn happy, and this was Friday's action, and I checked it out about 15 minutes before the close of the markets, and I saw this doji forming, and this to me is mixed signals. It's at the bottom of a strong downtrend. It's a one-day downtrend, and it's a huge doji. It interacts with the lower 34 and with the 21-day moving average and with the real 34. And it's just a doji. I mean, the price close and open is not really on top, and the close and open is not really on the bottom. It's right in the center. So that means extreme indecision. And I was in profit after 2 days, so I just went ahead and took that profit. And I didn't not want to be in this trade because it's just so many mixed signals. I didn't want to be involved with it. And there's plenty out there to be had, as we shall soon see. Okay, so that was a result of my live trade. I actually got 40% on my money in 2 days on that trade, with absolutely no stress, I might add, because I wasn't really involved in the market action at all, because I placed the trade after the market closed and just let it happen the way it did in the morning. Alright, now we'll check out the general market action. Here's the Dow Jones. You can see the recent action, the tank a couple of weeks or last week. The retracement exactly up to the 34-day moving average and the 21-day moving average. So we closed on it on Thursday. On Friday we opened exactly on it, pretty much went straight down throughout the day, and closed actually below the 55-day moving average, just barely below it. So in effect, the markets actually bounced off of the 21-day moving average and the 34-day moving average. They couldn't trade over it. They traded over it, but they could not close over it, and they bounced down off of it. And we closed below the 55, so to me that's very telling about the future. I think we're in for a pretty strong down week this coming week. That's my prediction. Okay, let's check out the S&P future. Alright, same action in the S&P, no big surprise. It is telling to me that both days we traded above these two averages, and both days we went down after that. We couldn't last, the price action could not last above those averages, and we did close just barely below the 55, so I think we're going down. Okay, now I went through the Dow and picked out some very telling stocks about the Dow that you should definitely either sell short or avoid. Do not be long this market, by the way, at all. Don't be long right now. Okay, let's pull up these charts. So here's AT&T. You can see the market crash down to the lower 34, the retracement back up to the 21, the 34, and boy, this is all gathered together, the 55 and the 144. And you can see what happened. This is what I call price interaction with moving averages, and this is what I look for. So we have the 21-day moving average right here, and then this is Thursday's price action. We opened right on it, we went up, we traded above the 34-day moving average, and then we went down below. The price action could not last above the 34-day moving average, so we bounced down off it in that same day, and we closed just above the 21-day moving average. So that's not a gravestone doji, but it's the same type of effect. We opened low, we tried to trade higher, we could not last, the price action could not last up there, and it bounced down off of these averages that I look for. And then Friday more or less confirmed, as close as confirmation can get in the markets, because we did continue the down action, and we traded below the 21-day moving average. I think we're coming down off of this, guys. So there's T. Okay, let's check out UTX. So here's UTX, same type of price action. All below these averages are all conglomerated together. Here's the market tank last week. Here's the retracement, and now we're bouncing off of this. This is a strong indication to me. Okay, so we opened right here. We went up throughout the day. The price action actually traded above these levels, and then we came down off it. We traded lower, came up a little bit, but we actually closed below the open and below these levels after we traded, after we tested them during the trading action. So I think this is another indication of down right here. And here's Travelers, TRV. Here's the market tank. Here is the retracement, and look, we came up and we tested this on Friday, tested the 144-day moving average, and that is a doji after a short-term uptrend exactly on the 144-day moving average, and it's not an exact doji. It actually closed a little bit below the open, and that to me is even more telling. So I think this is going to come on down. This doji again is usually a signal of the short term or of the most recent trend reversing, and boy, to me when it happens on one of these averages, it's very powerful. Strong potential of down movement in this stock. TRV. And now we're looking at MRK, Merck. So again, here's the market tank more or less, traded below the averages, retested them on Thursday, and look what happened on Friday. This is a big indication to me. This is a very strong indication of a very likely downward trend in the future. I see this coming down at least to the 144-day moving average before it hesitates. After that, who knows, it might come down below it, and it might want to touch this lower 34 envelope that I use. But either way, I'm looking for the next price action. It might not even hesitate before it hits this 144. And it might not be immediate. It might not be on Monday. It might be Tuesday or Wednesday. It might mess around below this like it did here. But before it goes up above again, I see it coming down. Probably, next week sometime. And now we're looking at eBay. Same type of action. You can see how we traded between the 21-day moving average and the lower 34. This was a good strong, this is when the market tanked, but again, look at the timing. There's so many examples of this, it's ridiculous. So we came down, played with the lower 34, came up to play around with the upper 21 here, and Friday's trading action was very telling to me because we have this bar. And what happened here, this represents all the trading action on Friday. We opened, came up throughout the day, tested these moving averages, did not like the price action up there. It was very uncomfortable to the world and to all the traders, so they knocked it down again. We could not trade above these levels, and it was uncomfortable trading at these levels, so we came down, the price came down, and we actually closed just a little bit above the open. But to me, in this case, that's less significant because we did test these moving averages and did not like it up there. We did not like the price action up there, so we bounced down off of them. That still shows that we're coming down. A very strong probability that we're going to come down this coming week. And this is eBay. And now we're looking at EQIX. Same price movement more or less. This one was already heading down before the market tanked here, and then we retraced, came back up, and you can see these two dragonfly dojis here signifying the reversal of this most recent trend. And you can see here we bounced off of the lower 34 just like we've been doing a lot lately with this stock. So we bounced down off of that, and high probability that we're coming down again off of it, and this downtrend will continue. Even if it does go through it, I don't see it going through it, but even if it does, it'll probably stay flat until it interacts with this 21. But this is probably going to come down also this coming week. And now we're looking at YHOO. And boy, we can see the market tank last week, the consolidation, and check these dojis out. Here's they're more or less two gravestone dojis in a row, and they're very significant to me. The first one is very significant because the open and the close happened right on the 55-day moving average. The high was on the 34 and the 21, could not last up there, bounced down off it, and closed again right around the 55. Then the following day, we opened at the low. We traded up through these levels that we tested the day before, the 34 and the 21, and did not like the price action up there. It was more comfortable down here. The price was driven down and closed right at the open, right at the low. So, and it crossed these averages. Very powerful to me. The next day, Friday, was very significant because again it confirmed these two gravestone dojis. We opened, went down through the 55, closed below the 55. So to me, this is coming down more. Look for the next stop, the next hesitation at what, 24.40. If it goes through that, the next hesitation will most likely be at 23.05ish. So that's my call for this stock, YHOO, for this coming week. Same story with AKAM, AKAM. Market consolidation, the tank last week, retracement, and look, we tested these levels. We could not trade through the 21 and the 34. We never even made the trade through that. This last Friday we opened right around the 55, traded up, tested those levels, didn't make it, bounced down off, closed right about at the 55 again. And to me that's more or less a doji, and again signifying strong potential to come down this coming week. And again, look for these two levels, 40.95 and what, 40.25. for a hesitation point in the downtrend this coming week with AKAM. We're looking at APC. Okay, the market tank. This is really nice. I would have probably taken that trade up to this point because that's a very strong up indicator, especially because it messed around with the lower 34 and the 144. Went up for a few days, did not like trading above those moving averages, came down. Same thing on Friday's action. Opened below them, tried to trade above them, bounced back down, closed below them. So I see in the coming weeks this most likely coming down also based on this price action. If the price action tells me differently one of these coming days, then everything will change. But based on this price action that I'm looking at right now, we're coming down this coming week. Alright, now we're looking at ACGL, and we can see here the market crash. Again, a very strong downward signal going through all the averages without hesitation, closing at the low. Bounced off of the 144, came up to the other averages, the 55, these are all the 55, the 34, and the 21. We came up to all those. This was Friday's action. Huge, major, tiny little doji, which means a lot to me, because we're right at the top of this short-term uptrend. We are exactly on all of the averages. We opened and closed on the 21. We came up to the 34 and the 55, bounced down off it, closed exactly at the low. This is very telling to me that this short-term uptrend is most likely going to change direction and come down in the coming week. ACGL. And now we're looking at CELG, and this is extremely telling also. Again, the market tank, the retracement up to the averages. Did not like trading above these averages. On Thursday we traded above it, but we ended up closing below the open. And on Friday we opened below the averages, we traded above them, we tested them during the day and bounced down off them. We did not like trading up above those averages. It was uncomfortable levels to this stock. So we came down, closed not only below the three averages that are all together, we closed below the open. That's very telling to me. That's a very powerful, I'll call it a gravestone doji, even if it's not technically a gravestone doji. In my mind, that's what I'm seeing, downward movement. That's the bottom line to me. So possible hesitation at 112.62 at the lower 34. If it goes through that, look for hesitation and maybe a slight reversal at 107.96. By then it'll be 107.97 or 8, because as it comes down this is going to come up a little bit. But around those levels, watch for this 144-day moving average. And now we're looking at SBAC. Same type of chart. You can see the market crash down off of these levels, that exact conglomeration of all these moving averages, and let me tell you, that's no mistake. Whoever does not believe in technicals doesn't believe in something that could really help them out a lot, because this is no mistake that this happens. And that was the market crash right there, and we had that little tiny, I call it a gravestone doji because it happened all below. The close and the open were below the averages, and we tested the averages throughout the day. Plus the beginning, the bar before that, we opened above everything, went down through everything, and closed with confidence below all the averages. So anyway, let's look at this most recent action. You can see on Friday's trading action, we opened exactly at the 21-day moving average. Tried to trade up a little bit, couldn't even reach the two upper averages above that. Came back down, bounced down off it, went through the 21 and closed below the open and below the 21. To me, that's pretty telling about the future price movement, especially because of what we've been seeing throughout this entire market. SIAL. Look at this price action. My goodness, that signifies down to me. It started back here. We had this huge uptrend, had a little doji here forecasting possible movement. A doji here, this one here actually signified the stop of the uptrend, obviously. And then these two bars confirmed it. This one confirmed it even further. That's a big gravestone doji there. Another down day, another down day. Look at all these down days in a row. Let's get back to fundamentals. 1, 2, 3, 4. Oh, they're not in a row, but there's a lot of down days. Look at these. Okay, gravestone doji, 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 down day, doji, down day, down day. All underneath this 21-day moving average. Come on. And a lot of it is interacting with this 55 also. Look at this doji interacting with the 55. All this trading action was below the 55. We closed below the 55. Again, okay, we tested the 34 and the 21. Couldn't make it through. We couldn't trade through those levels. And then what happened on Friday? Opened below it, came up through the 55, couldn't quite reach the 34 and the 21. bounced down off them, came down below it, went back right below the 55 again, closed below the open. That to me is a strong, powerful gravestone doji. This price action is strong, telling me most likely down in the future this coming week. I might be in on this trade. I haven't decided between any of these. There's so many, it's ridiculous. When this thing drops, look for the 78.30 level, look for the 77.30 level before it hesitates. Oh, and make sure to check out our Kramer Contrarian alerts. Those are often very powerful, and if you pay any attention to Kramer, they'll save you so much money. Okay, alright, so I do hope you guys have gotten value from this. I don't know of any other place that you can get this kind of in-depth market interpretation from so many different charts. And I want to give you guys value, and I'm not asking for anything in return. I just want to give you guys value. I want to either save you some money or help you make money. Thanks a lot for your time. I know how valuable it is. And again, don't ever trade based only on this. Do your other research and everything, but do use this before you look at any trade. This can save or make you a lot of money. Just this simple thing. So this is Q with Charting Discovery signing off for this week. We'll see you next time. Have a great week. Be prudent. Later.